Hi there, I'm Susie Stewardson with the Summit team at UFirst Realty. I want to talk with you guys today about FHA loans, and I have an expert on the subject, Chris Holcomb with First City Mortgage out of Fort Collins, and they are a subsidiary of Megastar Financial. Welcome, Chris. Thanks for coming in today.
Thanks for having me.
So, FHA.
Yeah, FHA is a great loan product. FHA is the Federal Housing Association, and basically it's a great loan to help people get into a home if they have some negative credit history potentially. Their credit score limitation or credit score requirements are much more lenient than a conventional loan. We can do FHA with as little as 580 as a credit score.
That's great.
And they're more lenient on some of those big derogatory items like bankruptcies and foreclosures and things like that.
So what are the guidelines, just real quickly, you touched on that. So bankruptcy, they can get a loan FHA after how many years?
Depending on the bankruptcy, but 2 years after it's been discharged.
Oh, that's pretty soon. So if somebody has a foreclosure on their record, how long is it before they can get a loan through FHA?
With FHA, typically it's 3 years after that foreclosure has been completed.
Okay, so when they get the, what's it called?
Basically the release of deed.
Oh, I see.
The deed is transferred to the new owner.
Okay.
But that's where at 3 years we can start to look at an FHA loan again.
Okay. It sounds like with the bankruptcy, which we haven't seen a lot of that in the last few, but we run into it every once in a while, and people think they can't buy a home. So this is a program. It sounds like they can get back into one.
Yeah, it really is. Some of those major items like bankruptcies and collections, and they'll overlook a lot of things that conventional loans won't.
Great.
Some of the other big benefits is their debt to income requirements are more lenient. So debt to income, we're going to look at people's monthly required payments, car payments, student loans, credit cards, etc.
Okay.
We're going to also look at their gross income.
Okay.
And there's a calculation of the gross income, the housing payment, and their monthly payments that they can't exceed. And FHA allows for a higher debt to income limit than conventional does that way.
Nice.
So sometimes even if your credit's okay, we'll go FHA because you can qualify for more of a home if that's where you're wanting to shop in.
Gotcha. Okay, great.
Some of the other kind of the negative pieces of FHA is they do charge a funding fee. It gets rolled into your loan.
Yeah.
But they charge a 1.75% fee that gets added to your loan. The mortgage insurance or the PMI, unfortunately on an FHA loan is permanent unless we refinance. And that's always the goal with an FHA loan is to continue to help build someone's credit so that we can refinance them to a conventional loan down the road when it makes sense.
Nice.
And then they do have a little bit more stringent appraisal qualifications. So when you're looking at a home, some of the things that would be okay on a conventional loan are not with an FHA home. So it can be old and dated, but you can't have that true fixer-upper type home with an FHA.
Okay.
My first house was an FHA loan.
Yeah, mine too.
It's so great, and it allows for non-occupant co-borrowers. When I bought my first house, my dad co-signed with me and got me in and got me started. Down payment wise, it typically requires 3.5% down plus closing costs. We can pair that with some of the down payment assistance programs potentially, depending on people's income and credit scores as well.
So how much out of pocket if they were going to combine it?
So if they were going to combine the two together, we could have someone in a home as little as about $8,000 out of pocket, down to as much or as little as $1,000 out of pocket.
Right, which is if the seller contributes to the closing costs, it's more common to see $1,000 or $2,000 out of pocket from the buyer.
Yeah.
So okay, thank you.
Thank you.